Welcome back to Alpha Recap. The market day just closed, and we have a lot to unpack from a session that felt like a rotation with a few big splashes. As always, if you have questions, you can reach us at stockalpha.ai.
Big day indeed. Markets closed with tech, materials, and crypto leading, while finance and parts of consumer took it on the chin. We want to walk through the why and what that means for portfolios.
Let's start with the headline movers. Tech showed real momentum. Not the whole sector, but chips and storage names popped after results and guidance. Seagate and Texas Instruments beat and then raised outlooks, which lit a fire under semiconductors and data center related stocks.
Right, those beat and raise prints suggested enterprise and AI infrastructure spending is stronger than some had feared. When core suppliers like storage and analog chips report upside, it ripples through capital goods, data center suppliers, and even fiber players.
Meanwhile, materials and mining were big winners. We saw M&A activity and fresh funding for critical minerals. One transaction that stood out was Zijin's takeover of Allied Gold for about $4 billion, and that helped lift miners and processors.
And don't forget the silver bounce and new U.S. rare earth funding. Those moves are not just noise. They tie directly into electrification and onshoring themes that we've been talking about for months.
Then there was crypto. Bitcoin rallied toward $90,000, helped by a softer dollar and renewed institutional flows. That flow into risk assets showed up in materials and some tech names too.
Exactly. But it wasn't all rosy. United Health dropped about 20%, and that sent a risk tone through the finance complex. A move of that size in a bellwether insurer made investors nervous about insurers, lenders, and rate-sensitive finance stocks.
When a major insurer reprices like that, people start asking hard questions about reserves, litigation exposures, and how that affects banks that have them as counterparties. It's a cross-sector shock you can't ignore.
And consumers felt pressure too. We saw mixed retail signals. Amazon closed some store formats and online return rates were cited near about 12%, which combined with logistics shakeups to weigh on smaller discretionary retailers.
Real estate was mixed as well. Big infrastructure projects and deal flow supported parts of the space, but municipal zoning moves, think California and Los Angeles issues, created uncertainty for certain property types.
So what you end up with is a market that looked bullish in pockets but fragile underneath. Leadership was concentrated, tech, crypto, and materials. While breadth was thin, that concentration makes the market sensitive to headline risk.
Let's unpack a few of the most significant specific moves and why they mattered. First, United Health's roughly 20% decline. That wasn't just a stock move, it was a sentiment event that rippled into finance.
When a large insurer drops that quickly, counterparties, lenders, and insurers get revalued. People ask if earnings need to be revised or if there's reserve build coming. So banks and other insurers traded cautiously today because of that.
Second, Bitcoin moving toward $90,000. That's not just interesting for crypto traders. A rising Bitcoin often signals risk on liquidity and can correlate with flows into growth and speculative assets.
But it also raises volatility risk. Crypto moves fast, so if you're adding exposure, you should size it and plan for volatility management, options, callers, or small position sizes.
Third, the chip and storage beats from Seagate and Texas Instruments. Both topped expectations and raised guidance, which told the market that data center and enterprise demand is holding up, probably linked to AI spending.
That's an important macro link. Faster than expected enterprise capex supports not just chip makers, but also data center REITs, fiber suppliers, and even utilities in areas where transmission capacity matter.
Speaking of infrastructure, there was a reported $6 billion agreement between Corning and Meta that highlighted demand in communications and fiber. Big hyperscaler commitments matter for long supply chains.
And on the industrial side, deals like an apparent $1.8 billion bid by IonQ for Skywater and a $1 billion expansion by Anduril show government and private capital flowing into advanced manufacturing and defense tech.
On the energy front, it was a two-track theme. Tight oil and gas fundamentals pushed prices higher. U.S. gas traded above $6.60, but renewables saw wins via solar commissions and transmission permitting.
That two-track energy picture creates interesting tactical ideas. You can get near-term cash flow from producers and midstream on the fossil fuel side while owning suppliers and engineering names tied to renewables and EV charging on the structural side.
Now, let's talk themes and correlations you should be paying attention to. First up, AI, data centers, and the power grid linked tech, utilities, and industrials. When chips and storage rally, the grid and transmission story gets real.
That's right. More compute means more power demand, and more need for transmission permitting and distributed generation. Regulators approving transmission projects becomes both a growth and a reliability story for utilities and industrial suppliers.
Second theme, commodities, EVs, and critical minerals. That nexus ties materials, energy, and industrials together. Mining M&A and rare earth funding point to durable demand for copper, lithium, and rare earths.
Which is why we saw miners outperform. Consolidation and public funding reduce supply risk over time and support multi-year electrification narratives. Prefer producers with clear balance sheets and near-term production visibility.
Third theme, dollar weakness lifted crypto and commodities. A softer dollar and positive on-chain indicators helped Bitcoin rally and pushed commodity-sensitive sectors higher.
But that also means you need to watch the dollar. Rapid moves can reverse risk-on flows quickly, so keep an eye on rate-sensitive data and Fed commentary.
Fourth, regulatory and policy risk was everywhere. From state cannabis legalization wins in Virginia and Hawaii to local compliance revocations in Denver, policy headlines created episodic volatility.
Investors in regulated sectors should expect headline-driven moves. Healthcare, finance, communications, and cannabis all showed how a single announcement can drive outsized returns or losses.
Finally, leadership concentration with breadth fatigue. Tech, crypto, and materials led today, but much of the market was mixed or negative. That means headlines can trigger fast rotations.
Given that, let's give listeners some practical actions they could consider. First, favor secular tech exposures tied to AI and data center demand, but trim into strength. It's smart to take profits on names that have already run.
Second, add selective materials and critical mineral exposure for the multi-year electrification trend. Prioritize diversified producers or those with processing capabilities rather than speculative explorers.
Third, treat finance and insurance names with caution. United Health's drop showed how quickly those sectors can reprice. Focus on capital strength and diversified revenue, and consider reducing leverage or using short-dated index puts as hedges.
Fourth, balance energy exposure. Overweight select midstream and producers for near-term cash flows, and add renewable suppliers to capture structural upside from solar and EV charging growth.
Fifth, manage crypto exposure carefully. Bitcoin's rally showed appetite, but regulatory scrutiny is rising. Use size limits, protective options, or regulated exchange-traded products to manage risk.
Sixth, be selective in consumer and real estate. Favor cash-generative assets, grocery and necessity retailers, and high-quality retail landlords over levered discretionary names.
On risk management, remember the checklist. Watch the dollar, monitor regulatory calendars, and size positions according to conviction and correlation. When leadership is concentrated, correlations go up, and you need to cap position sizes.
Looking ahead, keep an eye on macro prints and Fed comments. Inflation and payrolls will re-rate rate-sensitive sectors and the dollar. Also watch for follow-ups from United Health and any ETF flows or regulatory signals around crypto and Bitcoin.
Corporate guidance season matters too. If more chip and storage vendors keep surprising to the upside, tech and materials leadership could broaden. But if policy shocks persist, expect rotations back into defensives and cash.
Okay, time for our quick takeaways. 1. Today was a two-speed market. Tech, materials, and crypto led while finance and parts of consumer lagged. 2. The concentration of leadership raises the value of careful position sizing and hedges.
3. Favor secular winners tied to AI and electrification, but trim winners and keep liquidity ready. 4. Monitor policy and litigation headlines closely, especially in insurance, banking, and regulated sectors.
That's the wrap. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for joining us on Alpha Recap. We'll be back after the next market close with more sector moves, trade ideas, and the headlines that matter. Stay safe, size your bets, and have a great evening.